We kick things off with a major escalation in the Middle East that's sending shockwaves through global energy markets and ocean shipping. Iran on Saturday attacked a feeder container ship transiting the Strait of Hormuz, setting the 7,000 TEU GFS Galaxy ablaze and forcing the crew to abandon ship. The vessel, owned by a company out of the United Arab Emirates, was exiting the strait on a service calling Jebel Ali, Dammam in Saudi Arabia, Bahrain, Port Klang in Malaysia, and several Chinese and South Korean ports. Iran over the weekend declared the strait closed to vessel traffic and expanded missile and drone attacks on Bahrain, Kuwait, Qatar, the UAE, and Jordan. The flaring hostilities have pushed Brent crude futures up about 12% since Friday. European natural gas jumped nearly 70%, and U.S. gasoline futures rose roughly 10% since late last week. The crisis also shadows Maersk's announced plans to restart scheduled services through the Suez Canal and Red Sea, raising fresh questions about global shipping route security. Over in the automotive sector, Toyota is making a massive bet on Texas manufacturing with a stunning $3.6 billion expansion in San Antonio. The Japanese automaker is shifting production of its popular Tacoma pickup from Baja California, Mexico, to San Antonio as part of an investment that will double the size of its Texas manufacturing campus and create 2,000 new jobs. The expansion will add a second vehicle assembly line at Toyota, Texas, allowing Tacoma production to join the Tundra and Sequoia at the automaker's San Antonio complex. The company said the transition from Toyota Motor Manufacturing, Baja California, will occur gradually over approximately 4 years, with the expanded facility expected to be fully built out by 2030. The expansion adds around 2.5 million square feet to the San Antonio campus, bringing Toyota's total investment in the facility to $8.3 billion since construction began in 2003, and the completed plant will employ approximately 6,000 workers. Finally, Wall Street is raising the bar for trucking carriers heading into second quarter earnings season. Deutsche Bank analyst Risha Harnain is forecasting mainly beats across her transportation coverage, with less-than-truckload carriers leading the charge. She expects median earnings per share growth of 15% year-over-year for the second quarter and 21% for the third quarter, marking a meaningful improvement from the 3% increase the group recorded in the first quarter. Harnain raised numbers for both the truckload and LTL carriers she follows, with her LTL forecasts increasing roughly 8% on average and sitting above consensus expectations. Less-than-truckload demand is starting to reflect 6 consecutive months of positive manufacturing data, with intra-quarter updates from public carriers showing tonnage turned positive for the group in May following an extended downturn. The second quarter earnings season begins on Wednesday, when J.B. Hunt reports results after the market closes.